Hey, what's up, my friend? How's it going? Right, so I'm just curious, right? How many of you actually have your spouse watching with you this video every single week? Right, because I received an email from Alberto, right? It says something like, along the lines of, take care, my friend. I do not even know you, but I already consider you as a friend as I watch your videos every week. Even my wife knows you, right? So, Alberto, right? Thank you so much for reaching out. I really appreciate the fact that you and your wife watch this video every week together, right? Maybe spend some time to bond. I don't know, but yeah, really appreciate it, right? So I'm also curious, right, to all the others out there, whether you guys watch this video alone, or with your friends, or spouse, husband, or whatever, right? So that's it. Back to this week's market analysis, right? I'm going to talk about a few markets, right? I wanted to share with you a setup that I mentioned, I think, a couple of weeks back, right? The pound dollar. I don't know, is it 2 or 3 weeks back? So we had some follow through, and I want to explain to you the thought process on how I actually entered this trade. Plus, I want to talk about breakouts, right? A lot of times, traders, they like to trade breakouts, right? Because, quick money, right? Easy profits, right? Boop, the market goes in your favor. But often, when you trade a breakout, it only reverse and stop you out for a loss. So I'm going to share with you what are things I look for when I trade breakouts, right? And this is really important. If you can actually filter your breakout trades between this factor that I'm going to share with you, it's definitely going to improve the odds of your breakout trades working out. Okay? So all this and more in this week's market analysis. I'll see you there. Okie dokie. So what you're seeing right now is the chart of the cable, the daily time frame. Cable is known as, the pound dollar. Pound dollar is known as cable, right? They basically, refer to the same currency pair. So this was a setup that I mentioned, I think, a couple of weeks back, or maybe, 3 weeks back, right? I said that I was actually looking to short this market, right? So let me walk you through why this is so, right? If you've been following me, right, you know that I talk about this same few concepts over and over again, right? If you want to trade with the trend, how do you go about it? Number one, identify the trend, right? Series of lower highs, lower lows would help you identify the trend. If you're not sure, you can do this thing, right? This tip that I can give you to help you identify the trend. Use the moving average, 200 period moving average, right? You can use exponential or simple. It's not going to make much of a difference, right? I like to use black for this, and you click OK. So my definition of trend is this, right? If the 200 period moving average, which is this black line over here, is pointing lower and price is below it, then the longer term trend is towards the downside, right? So let me write this down, right? If 200 MA is pointing lower and price is below it, right? Then the trend is down, right? The trend is down. Pardon my handwriting. I know it looks like a kid handwriting, but yeah. If the 200 period moving average is pointing lower and price is below it, then the long-term trend is down. So this is a very simple definition of how I define the trend. So in this instance, clearly it's pointing lower, price is below it. So I'm looking to short this market. So number one, what we have is, we have the trend. Second thing, what do you need? You don't want to enter a trade, just because it's in a downtrend. You want to trade from an area of value, right? There are two ways to trade trends. Either you're going to trade a breakout, or you're going to trade from a area of value, a pullback. So in this instance, I was looking to trade from an area of value. Where is the area of value? Right? There are a few ways you can define area of value, like support, resistance, or even like moving averages, right? Dynamic moving average, right? Dynamic support resistance in terms of moving average. So in this instance, I use just very plain old vanilla resistance over here. You can see this is an area of resistance, right? And the third thing you need is simple, right? A trigger, right? How do you actually enter a trade? You need a trigger, right? So let me walk you through this over here. This was the area of resistance. I really like this. I think I draw the line somewhere. I think it was here. This is an area, right? You want to treat support and resistance as an area. Just don't draw one line down here and say, oh, this is the resistance, all right? Come on, all right? This is when you're dealing with trading, right? Especially technical analysis, you're dealing with it's an art, right? There's no precise pinpoint exact level, right? It's always dealing with ranges and variances, right? So for example, your support and resistance, they are not levels but an area on the chart. So one thing I like about this was the fact that, let's say I draw it somewhere here, right? Just above this height. Doesn't really matter where you draw it as long as you treat it as an area. But why I want to highlight out that this high is because, for example, you look at this chart, right? Why this is significant is because when price trades above this high over here, what happened? Well, there are traders who are looking to trade the breakout, right? Because, oh, price is breaking above the highs. You have a series of higher lows, higher highs. It's a breakout. They go long. So traders who long this breakout, right? Chances are, let's not talk about the stop loss, right? But as you can see, this breakout clearly didn't work out, right? But I didn't just trade it against them when I see this green bar. In fact, I was waiting for my trigger, which is the third thing that I'm looking for. So where did the trigger come from? Right, go down to the 1 hour time frame. For me, I use the 1 hour time frame, right, the lower time frame, and I was looking at the price action. So this is the black line over here showing you the area of resistance. So what I saw is this, right? I saw higher highs and higher lows, right? You see higher lows, higher lows, higher highs, higher highs. So what was interesting is that when the market sell off over here, right, this portion, right, it had a pretty steep pullback. Then I was paying attention to see how the bulls reacted, because if you look at it previously, the bulls have actually reacted pretty strongly. Look at how they push price higher, they push price higher, push price higher, push price higher. But when it came to this portion over here, something doesn't look right, because if you look at the strength previously being shown by the bulls, clearly this is something very different. The bulls seems to be weakening, right? They're not having the same strength that they had previously. So when I saw this was a sign to me, a signal to me that the bulls are getting weak, and there's a good possibility that the bears could take control and push price lower, right? So this was my trigger. My trigger was basically to place the sell stop order below this low, stop loss above this high, right? I don't really trade any specific price patterns like, you know, the pin bar or whatever, but this clearly forms a what they call maybe a dark cloud cover for those of you who trade Japanese candlesticks. But I don't do that, right? I basically look at the price action on the lower time frame, and I went short this market. Okay, so I hope you can see how the setup comes together, right? I'm not just blindly trading patterns, right? I look for a few things whenever I'm trading the trend, right? Number one, to have a trend, area of value, number two, and the third thing is the trigger, right? And the thing about trading setups is that you always have to understand who you are profiting from, right? Because in trading, right, this is basically a negative sum game, right? In the world of transaction cost, if there's no transaction cost, it's a zero sum game, meaning for you to profit, someone has to lose, right? This is a fact. You can't. There is no way to, you know, to, I would say, deny it, right? It's a fact that in trading, right, for someone to profit, a trader to profit, another trader has to lose. So if you think about this, who am I profiting from, right? I'm basically profiting from traders who long this breakout, right? Because as price trades against them, they are in the red, right? And I'm guessing, right, their stop loss are below this low, and maybe deep below this low over here. So this is why you can see, you know, further selling off as price triggers this stop loss by those traders who trade the breakout, right? So this is basically why I traded this particular setup on the pound dollar, right? So for those of you who happen to be in this trade, I would say a logical level to take your profits, depending on what type of trade you want out of it, right? For example, whether you're a swing trader, if a swing trader, these are particular levels where you want to exit your trades, because there would be potential buyers to come in to buy at these possible areas on the chart. For a trend follower, then you can, you know, choose to ride the trend depending how you want to ride it. Series of lower highs, lower lows using a moving average. I think this is something that, you know, is out of, you know, today's video. There's just way too much to talk about. So this is just some insights that I want to share with you. Okay, so the next chart that I want to talk about is sugar, right? It's another trade that I've taken. So this is sugar. So looking at the weekly time frame, you can see that sugar is pretty much in an uptrend, right? It had a very strong rally and had this long period of consolidation over here. And when you look at this daily time frame of sugar, all right, let me ask you, right? Why didn't I go short at this level over here, right? It's a area of resistance. Why didn't I go short? Right, I'll give you 10 seconds to think about this, right? Why didn't I go short at this area of resistance? Compared to earlier, you saw the pound dollar price was at resistance and I went short at it, right? Think about it. 10 seconds. Okay, so let me share with you my thoughts on it, right? There are two reasons why I didn't want to go short at this area of resistance, right? Number one, the first reason is against the trend, right? If you look at this one, the trend compared to the pound dollar, this is in an uptrend. So in an uptrend, I would pretty much prefer to go long. Okay. The second reason, which I think is very important, is that look at the way price has approached resistance, right? Compared to the pound dollar, right? When price came into resistance, which was like this, right? A very clean move into it. This one over here is very choppy. In fact, this is what I call a build-up, right? A consolidation at an area of resistance. And if you think about this, right? If this resistance area is to be strong, right? There is no reason for price to keep consolidating at resistance because the sellers, the supply would come in and push price lower. But in fact, if price can actually hover or consolidate at resistance, it's telling you that it's showing you a sign of strength, right? Think about this. Support is an area where you expect buyers to come in to push price higher. Resistance is just the opposite. It's where you expect sellers to come in, right, to push price lower because there is more selling pressure. But if price can actually consolidate at resistance, what is it telling you? It's telling you that, number one, either the sellers, right, do not have the pressure to push price lower, or number two, the buyers, they are willing to buy, willing to bid at these higher prices. Whatever the case is, right, there will be traders, in fact, a number of them who are going to short at this area of resistance because, you know, you study the textbook, they say, you know, you short at resistance, place your stop loss above the high over here. So they put their stop loss above this high, above this high, above this high, right? So there will be cluster of stops that will be attracted to this area of resistance. And given the fact that if price just cannot move away from resistance, it's telling you that there is sign of strength. So for me, what I did is that I went long when price broke above this high over here, right, with a buy stop order above this high, right? So I traded the breakout. So I hope you can see, you know, when you are trading breakouts in the market, right, you really want to see how price approached the level, right? If you look at the pound dollar earlier example, you see the way it approached is just one straight move into area of resistance. I will not trade this type of breakout. Whereas sugar, right, you have a build up over here, right? You have traders putting their stop loss above this high because they are short this market. And when you have enough stop loss at this area, it would tend to trigger a reaction of it, right? On top of it, I'm trading with the trend. So this was why I traded the breakout on sugar. I had a stop loss, I think was somewhere over here, and I'm looking to ride this trend and see how it progresses on, right? So this is my trade on sugar. And yeah, another market I want to share with is the 30-year, right? We spoke about it last week, I believe, right? So I said that on a weekly time frame. Let me get rid of this line first. On a weekly time frame, I shared with you that this market over here, price is respecting the 20 and 50 period moving average. They are acting as dynamic support over here. And on top of it, on the daily, we have the confluence of this area of support as well, right? You have this one, you see previous resistance, now turn support. So this was the area I was looking at. So I entered this trade, right? So let me get rid of this line first. Right? I entered this trade and it's a mistake. It's my mistake. And I want you to understand why, right? So basically on the 1 hour time frame, you know that this is an area of support, right? The black line you saw earlier. So I saw this, right? The market came down, right? Series of lower highs, lower highs. Look at the selling pressure, look at the selling pressure, look at the selling pressure. Very strong. But look at this, right? It seems to be fading away, right? Look at the compared to the size of the bearish candles, right? This one is a little bit more tame compared to this one, which is very large bodied bearish candles. So what happened is this. I saw this and I went long when price broke above this high over here. I had my stop loss below this low. Now, why is this a mistake? Right? I want you to think about this. Why did I say that this trade of mine is a mistake? Right? Think about this. Take 10 seconds and think about this. Okay, so if you have said because there is no build up, then you're right? Because there is no build up over here, right? Compared to the trade on sugar earlier, I mentioned that I'm looking to trade the breakout if there is there's a build up. But in this instant, there isn't a build up. So this is my mistake that I made, right? So basically, I entered over here and then price came back lower and starts to consolidate over here right now. So this was my mistake. And to be honest, right, the reason why I'm sharing this with you is not because I like to humiliate myself, you know, in a public domain. But rather, I find that if I were to share my mistake with you openly, these lessons would sink deeper into my subconsciousness, and I tend not to repeat this type of mistakes going forward. So this is the reason why I don't mind sharing this with you, right? You learn from my mistakes, and at the same time, right, I can better manage my trading in the days ahead and not make this mistake again. So this is something that I'm not too happy about, right? This setup that I took, right? Ideally, what I would like to see is for price to come into this area, right? Like for example, this over here does a build up, right? And then it breaks out. This would be a much better trade for me personally, right? So this is the 30-year trade that I took. It is a trade that is not a good one, right? So I hope you managed to learn something from this. Okay, so yeah, that's all I have for you, boys and girls, in this week's market analysis. I think I didn't share with you any particular trading setup this week. Okay, so you know what? Let me share with you something that I'm looking at right now. How about this one called Dollar Canadian? Dollar Canadian, right? Okay, the trend is towards the downside. All right, so if you just plot your 200 period moving average, you can see that it's pointing lower and price is below it. So if you're looking to short, so where do you want to look to short? Number 2, area of value, right? So this is an area of value, right? This area of resistance. So maybe I just plot in this area of value over here. All right, let's draw it somewhere, say here. Okay, so again, right, if you know, right, you learn that you don't want to trade breakout without build up. Over here, price just zoom all the way into these highs over here. I am not looking to trade this type of breakout, right? I don't want to. So for those traders who actually long on this breakout, right, their chances are they're feeling a little bit nervous, right? Because price seems to be trading lower. So what's going to happen, right? Chances are their stop loss is below this low, or this low over here, right? Around there. So for me, I'm looking to take the opposite side of their trade, right? I know they are trapped right now because those traders who long on the breakout are basically trapped. So looking on, say, for example, let's say the 1 hour time frame, you see that the market is basically somewhat in the range over here. Okay, so how do I tell when the bears have taken control, right? What I'm looking for is this, right? I know this is an area of support, so I don't want to go short into this area of support because there could be buyers coming in to push price higher. So a more higher probability trade, if you ask me, is to wait for price to break support, right? Then to stage a rally by the bulls, right? So you want to see the bulls make a weak rally attempt. You don't want to see strength like this or like this. You want to see very weak rally attempt by the bulls. And if they couldn't push price higher, and then I'll place a sell stop order below this low and to short this market with stop loss above this high. So that is the potential setup that I'm looking for in this dollar Canadian pair, right? And who am I profiting from? I'm profiting from traders who are basically long this market right now and are feeling the heat. So if price is able to break somewhere below this area of support, this low over here, we could see further price decline, right? So you have to know who you're profiting from when you're trading, right? There's going to be winners and losers, right? You have to know who is the one on the opposite side of your trade. And don't get me wrong, right? There is no such thing as, 100% win rate. You are going to lose from time to time. So this is why I keep mentioning, right? Risk management. You can have the best trading strategy, right? The best one out there. But if your risk management is crap, then your trading is crap, right? No way about it. Okay, so yeah, this is a particular setup I'm looking at this week. So that's all I have for you all in this week's market analysis. I wish you all good luck and good trading. And if you enjoyed this video, give me a thumbs up so I know it is something that is useful to you. With that, I wish you all the best and talk to you soon.